Our guest today says that 2024 was a year for the record books when it comes to exchange-traded funds. Joining us to discuss the big trends and what may be in store for this year is Andres Rincon, Managing Director and Head of ETF Sales and Strategy at TD Securities. And Andres, welcome to the show. Happy New Year.
Thank you for having me, Anthony.
All right, so it's a record year for Canadian ETFs. Why don't you walk us through some of those key numbers that you saw?
Sure. In terms of the numbers, look, there's numbers across the board because, as you mentioned, this is a year for the record books. It's not just in just a big number, which is we've seen, call it over $75 billion come into the ETF space. And this is a huge number. This is 30% more than we had in the previous record, which was in 2021. But it's also across the board. Equity, we have record numbers in the equity space. Fixed income, we have record numbers in the fixed income space to the tune of, call it, $26 billion coming into that space. But also, even though it's been mostly led this year specifically by passive equity, also active strategies have brought in a fair amount of assets, and it's also seen larger growth on a percentage basis than, let's say, passive equity, for example. So across the board, we're seeing that. Also, for your audience specifically, asset allocation ETFs had record inflows this year at over $10 billion that came in that year. So across the board,
see really, a lot of diversity, as you and I were talking about the IFIC numbers earlier.
Yes, and really what we're seeing, a lot of movement from different structures into the ETF structure. And we're seeing that in record inflows, record new products in Canada, which is also this year. And also, for the first time in Canada, we reached a milestone of over $500 billion in assets here in Canada. So we're very proud here in the industry to reach that milestone.
Okay, we'll talk about some of these new products in just a moment, but take us through some of the trends behind the performance, as well as if you're seeing any regulatory changes in the industry as well.
Yeah, so trend-wise, this year specifically, and I was mentioning that earlier, it's been very much a year of passive equity. And a lot of that has to do with the macro environment where rates are going. Obviously, rates are going lower this year, but also we're very much in a risk-on environment with the U.S. And if you look at flows, nearly 50% of every dollar that went into the ETF industry, it's really 43%, but nearly 50 cents on the dollar is going into a passive equity ETF. Specifically this year has been very focused on U.S. equity. If you looked at the year before that, it was definitely not the case. It was very much on fixed income and very much also on active. So it's complete 180 to what we saw the year before, and why it's very much a risk-on environment. Other areas where we've seen a lot of interest is covered calls, for example. The need for yield tends to be, or still very, very high in Canada. And we've seen also other areas, like, as I mentioned, active ETFs. A couple of the themes that we've seen or trends that we've seen this year that have been unique is Bitcoin ETFs in the US launched this past year. Actually, this weekend was the 1-year anniversary of Bitcoin ETFs.
Okay, I didn't know that.
Having launched in the US. And on that note, actually, one of those ETFs, the most successful Bitcoin ETF in the world right now, which is IBIT from iShares, that ETF launched in Canada yesterday, the Canadian version. So we've seen a lot of growth there. So Bitcoin is one of the areas where we've seen a lot of growth. There's also a lot of trends towards private asset ETFs, which is something that's new to the ETF industry. We haven't seen a real launch yet, but there's a lot of issuers having launched similar products or going that way. So that's a big area of growth. And the other thing to mention from a regulatory point of view, as you mentioned, is the ETF series. Without really getting into the weeds, in Canada, you can launch an ETF of an existing mutual fund. That allows, obviously, for the history of that fund to be used for the ETF. In the US, that's not really allowed. Vanguard had a patent that expired. Now that it expired, there's a lot of filings in the US for similar products. So your traditional mutual fund provider in the US, hopefully or very likely, will get the option to launch an ETF in the US, and that will fuel a lot of the growth in the US.
Okay, so you talked about some of the popular ETFs. Tell us about some of the new ETFs that have made it to market recently.
So one of the areas one of the new ETFs that's really interesting is the bond covered call ETFs. This is an area that really is really new, I would say. Covered call ETFs have been around for many, many, many years. But bond covered call ETFs are very, very new. And this year we had a couple new ones in Canada, ones that target the long end of the curve, which have been very popular. Also now we're seeing let's say, ag. So exposure to ag, but in a covered call version, so it gives you higher yield. So these are, I would say, pretty new to the structure or to the world of ETFs here in Canada. The other products that are very popular, have been growing in Canada, are the buffer ETFs. Those ETFs have been growing in popularity in Canada for those looking for a more hedged or protection environment. So those are very popular in that space.
Are there any other popular ETFs with Canadians that you can name?
Oh, in Canada, covered call ETFs have become very, very popular. They've been growing quite a bit here in Canada. Fixed income ETFs, they continue to be very popular despite rates going lower. We get a lot of money now going into money market ETFs. This past year has been a very big focus for Canadians going to money market ETFs. They're still yielding a decent amount and it's a low risk environment. So the shift is either go to that part of the curve and then a lot of money in the equity space, which is interesting. So those are big areas. And obviously, as I mentioned, passive equity. The highest inflowing fund this year is a passive equity US focused fund on VFE from Vanguard. It's brought over $6 billion in inflows just this year. So as I mentioned earlier, it's very much focused on US equity, and it's been a big part of the story this year.
Okay, so given that big year we had, over 500 billion in assets, what are some of the key things that you'll be keeping an eye on as we look ahead to 2025?
Oh, for sure, private asset ETFs. I think the entire industry is keeping a close eye on what the big issuers are doing in that space. And we had BlackRock make several acquisitions in that space in the US to prepare for an offering that is very well covered and very well studied, and that they can provide something like that in the US. State Street was the first to file something along those lines. Now, this filing from State Street only allows up to 15% in private assets, but it would be the first ETF that gives you exposure to private assets, in this case, private credit. So they were very closely watching that. The ETF series, as I mentioned, is a big thing because your traditional mutual fund provider in the US that is active for the most part, there's still a very small part of the pie in the US. In Canada, actively managed ETFs are around 30% of the AUM in Canada. And we're a leader. Canada is a leader in actively managed ETFs. In the US, it's a very small part of the pie. And that has to change. And it will change with the ETF series. It will balloon and very likely go more closely to what we have here in Canada. So that's something that we're all watching very closely. And the other thing that we'll really closely watch is more of an institutional angle. A lot of the life insurance companies here in Canada weren't very active in ETFs because there were punitive charges applied to ETFs, and some of the regulatory changes that have been applied recently make it easier for life cos to buy ETFs. So I think we'll see a lot more activity from that space specifically for Canadian ETFs.